what is a real approval then if it's just a piece of paper? So a pre-approval is just a piece of paper that says, hey, I looked at it and we said you're approved, etc. So it all comes down to the person you're working with. When they say you're our client, our now mutual client, whether we send it to you, you send it to us, our now at this point mutual client, what is it actually approved? To go to add to everything that we just said, there is no deal that we're sending out an approval letter where it's not actually approved. We treat the deal like it's closing tomorrow. And therefore, even though you didn't find a house for them yet, because you didn't even start looking at because they're not approved yet, we run the client through the mental scenario, the simulation of you're closing tomorrow, here's what it'll cost. This much, this much, this much. Or hey, you know what? You're not approved yet. You got to do 1, 2, 3, and then you're approved. And the update we give you guys is it'll be 3 months out. This will be a 1 year out. This will be a 1 month out before you start showing them homes. Because they might be approved, but they might not have the money yet. And that's where another thing where someone gets carried away is we got the approval, we ran findings, which we'll get into some of that stuff a little bit later. But we didn't go over the fact that it's going to be $23,000 out of pocket to close. When I say we, I mean other people. We always do. We didn't go through over that it's $23,000 out of pocket to close. And now push comes to shove, you're at the point where you're supposed to be closing. And now the buyer really sees what they really got to spend. They thought it was $5,000 less or $7,000 less. Some people, people in the business might think that's not a big deal. But tell it to a family of 4 people, making a normal income. No, it's a big deal. They won't be able to make the difference. So that's what that's about. Anyone else want to add to that? Interest rates?
What I think is happening, everybody refinanced during COVID to get those lower rates, and that ultimately turned it into a seller's market right now.
Mm-hmm.
So all of the good inventory is pretty much getting ate up by the people that can afford it.
Yep.
And if you once could afford a $200,000 home, you're now probably at a $150,000, $140,000 right now, being able to afford a home. So I think that's been challenging when it comes to getting approved buyers, because a lot of times buyers can't wrap their mind around that. Hey, this is not 2018. This is not 2019. This is 2023, and the homes that were available then, they're just not right now, because if you refinanced and got a 2.5% or 3% interest rate.
And every family, or if you're paying attention to your budget, you're sitting on a steal. You're not going to get that deal again. So there's even very wealthy people that are not moving because they're like, I got too good of a deal on my $1 million house. I was about to go build a $2 million house, but I think I'm going to sit tight for a little bit because I got too good of a deal. It affects everybody. It affects everybody, and that's something that I personally am voicing against the idea of rates don't matter. They do matter. It shouldn't matter. It shouldn't change your work ethic. It shouldn't change your knowledge. It shouldn't change us working towards getting buyers into homes and buyers pre-approved. But we have to acknowledge that it is a factor. And as long as we know that, we can work around it and be realistic about the amount of business that you could do based off what people will actually do. Nobody's trying to force someone to buy a home and they have buyer's remorse, right? Nobody's trying to do that. So that's all I got to say about interest rates, unless anyone else wants to add. Going once, going twice. All right. So next item, appraisals and home value. Another thing people have been waiting for is appraisals and home values to come down. It hasn't really happened. I'm gonna use a specific description. It hasn't happened in the suburbs of America, and I do not believe it will happen in the suburbs of America. We're in Michigan. The suburbs of Michigan have been holding value. Prices have not come down. They have not come down. This is all the cities. Like, unless you're like up north, and even then it might not be that way, but like a very, light area, so to speak, as far as how many people are there. Everywhere from, Macomb all the way to Novi, Northville, home values have held. Home values have held. So waiting on that, what I've been telling people is if you're waiting for home values to drop, it's not smart, number one, because you could be waiting forever. So I'm always shooting to encourage people to if my family is ready to buy, then let's buy. When people ask you, is it the right time to buy a home? Is my family in the right stage of life in our family's milestones to buy? Then let's buy. If we're not there yet, if our family can still support the same house with a family of 4, husband, wife, 2 kids, etc., then don't move. But if you're having your 3rd or 4th kid and now you have to, you basically have no choice at that point. You have to make a move. So values dropping, I don't see it happening, but what I do want to say is we're seeing something that's actually helping us out where the offers are not crazy how they were in like 2021 or even early 2022. But because it's a more normal offer now, we're getting appraisal values that are coming in higher than the purchase price. And when we get that, this is not a guarantee, when that happens, we could go back to the agent. If you're the listing agent, I'm gonna say, hey, value came in 5,000 above price. We would like to increase the price to 255 instead of 250. Give us back the 5,000 as a seller credit. Same difference for you and your seller. Commission still based off 250, nothing's changing. Our buyer now just gets a better deal. They could spend less money at closing. So that's one thing. I want to say we've done it on 3 deals in the last 2 months where that happened and we were able to do it. Look, if you're talking about business and investment, maybe that's a good idea, but if you're talking about where your family is going to live, I don't think people make money where they live. You're lucky when look, in the last 10 years, people made money where they lived because of what happened. Right. The Great Recession and then the Great Appreciation, let's say, right? Yeah, we all made money. Nobody expected that. Nobody planned for that. Someone could say they planned for it. They're talking themselves up, You don't make money where you live. You just don't. You're lucky when that happens. Could you make money on an investment property? Could you turn where you live into an investment property and then make money on it? Of course. If you're talking about where you live, I'm going to move here. I'm going to live, whatever sort of lifestyle you want to live there. Let's say a normal lifestyle. You're not making money there. You're just not going to, So we sold our old house that we moved to the house I'm in right now in 2011. Our old house, we sold it in 2016. The value appreciated so much. We're like, we got to sell it. We're about to make money. Was there any way we would have known it would have appreciated even more and more and more and more? Had we known, hindsight is 2020, had we known, we would have kept it, but nobody knew. And anyone who says they knew, so I'm all about where you at in life, primary homes. Now, if we want to talk about investment properties, it is different. It is different because rates are higher on an investment property. Down payment is higher, 20, 25%. But even then, the question is, can I make money on this home over the next 3 years? Through rent, through higher rents, because even though landlords may not be charging higher rent yet, it's coming. Because they might say they don't have to because they have a 3. There you go. Even the landlord who says, I have a 3%, I don't need to charge more. I can still make money. They're going to say, why wouldn't I? Because the market is allowing for it. So they're going to charge more.
To make repairs cost that more.
Yep.
So you don't have a choice. Overhead costs.
So for the investment who says, I'm trying to make money, the investor, yeah, what I say is in the next 3 years, 5 years, if you can make money off rent, or in the next 1 year, if you can make money off fixing and flipping it, then do it. If you can't, then just move on. You will find the property that's out there.
Can I rent like 1 bedroom in my house? Yeah. Can I rent 1 bedroom in my house?
Yeah, you guys are finishing your basement, so knock yourself out, All right, appraisal values. Anyone else want to add anything to that conversation? Going once, going twice. All right. So, next item. Offers and offer strategies. So, there are, in my mind, 2 different types of offer strategies. Going in for the winning offer or going in to try to get a better deal. Meaning you're putting at asking, which I think is neutral, or above, which is the winning offer, or you're coming in below, which in my mind, for the most part, is a losing offer. Unless the realtor knows something specific about this home where you just know it's going to go for less. I would argue that most homes, if my family's looking at that home, and then your family's looking at that home is a desirable home and is going to get competitive. So if these homes are desirable homes, why are we going to go in at the lower offer again, unless you know as a realtor that that's what's going to happen? You kind of have either insight or inside information, right? By speaking with whoever, you see there's no activity, etc. But whenever the competition is there's 2 families, there's 3 families, we're shooting not ourselves in the foot, we're shooting our client in the foot because we're helping them make offers that are going to lose. So it's fine because we all have to go through it. You might have to make 1 offer, 2 offers, 3 offers, or they lose it until the client gets it. That's 50% of the time, I would say, maybe a little less than 50% of the time. We're lucky when we have the client that says, I agree with you, let me go and make the winning offer right away. You know, that's the challenge. But this is what I ask people. I'm gonna skip to this part in the same area. What is the job for us as loan officers and realtors? In my mind, or you tell me, what's your job as a realtor? What's your main job for a family as a realtor? What's the one thing? Okay, let's get one more.
What was the question again?
What's your main function as a realtor? For a family. Family's looking for a home, what's your main job? Okay, one more, and then I'll put my answer. Okay, it's to get them the home that's fit for them. Get them into the right home. Okay, what's my job? What's our job as a mortgage company? It's to make sure they're approved for the right home that you're gonna find them. It's to get them to the closing table. Our job is not necessarily to save them money. I'm gonna contradict myself later because we're gonna talk about savings and programs, right? But our job, first and foremost, is not necessarily to save them money. Our job is not necessarily to give them discounts. Our job is to, at a professional service, at a competitive price point, we're gonna get you into this home. That is our first job, first and foremost. If we start putting savings as the main priority, we're just gonna make losing offers all the time. And then it turns into a sad story where you're upset at the client because they're not making the right offer. The client eventually gets upset at you because they start talking to another person at somebody's event or birthday party. And why would you close on a home? I'm working with this realtor. It's like, she's not helping you make the right offer. That's the conversation that's gonna happen. When in reality, it was the client who was not trying to make the right offer the whole time. So our job is to get the family into the right home and get them closed with as much peace of mind and preparation as possible. Then comes everything else. If I could save you money by doing that, I will. If I could save you even more money by doing that, I will. If I could follow up with you once rates drop and I could save you money then, I will. So that's what that's all about. That's my definition of what our jobs are. Anyone want to add to that? All right, all right. So going up back here a little bit, I could kind of pass that. The fast closings, we're going to talk about it in a second. But with offer strategies, you know, there's all kinds of stuff. There's appraisal guarantees. There's above asking. There is paying the seller's transfer tax or owner's title, a unique item. Okay. There's so many different ways we could come up with it. Come up with ways of winning a home offer. Okay. Sometimes it's simply the fast closing. Sometimes it's a combination of higher EMDs, even a non-refundable EMD. Like, let's say it's like, hey, once we pass inspection, I wouldn't like to make a non-refundable EMD if we didn't do an inspection yet. But let's say the contract says, once we pass inspection, non-refundable EMD, that's also an item where they're like, okay, we're guaranteed to save time by getting that money back if we lose the time. So many different ways, which, you know, I don't want to go over every detail. There's one main thing in regards to appraisal waivers that we're going to go over in a little bit that I love. That actually is something that we can make easy for everybody. But there's so many different ways that we will learn together, or you guys will learn also as we're working together on various deals. So if there is a specific offer strategy someone would like to throw in that I didn't mention, feel free. Of course. Oh yeah. When the listing agent says that. Yeah. Oh. There's nothing better. I wish it worked that way. I wish it worked that way with everybody.
Sometimes you just get an agent that wants to play hardball. Yeah. Like, hey, come on, man. Just
I got 3 offers. I got this. It's like, just give me the number. Just give me the number. I'm gonna add something to that in a second. Sylvia, go ahead.
I have one. I'm not a realtor, but I have one.
Yeah.
When they do like the letter saying like, this is Sylvia Sheena and she's a new mom or whatever it is, and this is the home of her dreams, and she's been looking for a house for a year. Here's a picture of her family. This is a perfect home for them. Blah blah blah. That whole
They did that when I was buying a house, but I wanted the house in the same neighborhood as my parents, so my realtor did that. And I got the house.
That is something you can't depend on, but it doesn't hurt. It could only help you. So like if the seller is someone where that does touch them, it helps you. If those sellers don't care, they're only about this, it's not gonna do anything. But you know.
I flipped the house a couple months the letter. I didn't want to read it. The agent was kind of putting it in my ear, saying that she was going through things that were living in a hotel. I didn't want to hear it. I didn't want to read the letter, so I gave it to my partner.
Yeah.
Because I didn't want to get sentimental with it.
Yes, yes.
But he ended up reading it, and then we ended up going with their offer because of the letter. So,
Got it.
yeah,
So let's say there's two offers that are pretty much identical, and you get that letter, you're going to take the sentimental one because they're identical offers. So it doesn't, you can't depend on it, but it can only help you.
To the sellers, then they're like, I want to give my house to these people instead, you know,
Yeah, I
than
had
some
that too.
Joe Schmo.
They don't want investors, they want somebody that's gonna live in it, all that. I need to be fine. I try to put it together, agent Hirschman too.
Anyone else want to put any other strategy out there? Laurel, I'm going to put you on the spot. Give us one. Give us one.
They're all said send some liquor, you just didn't want to say it out loud. What is it? Send some liquor. How are you gonna say no to that?
one of the things that will help an offer is the actual the mortgage broker or the loan officer. If you have a relationship with them and you can say, hey, I worked with Terry for 5 years. He's closed multiple loans. Things like that helps get an offer through as well.
100% agreed. And we're actually going to get into that. It's a part of something that we do. Yep. Going once, going twice. All right. Next item connects value. So we have a promise. That promise is quality, transparency, and speed. Quality meaning whatever we do, we're going to do it the right way, the best way. Transparency meaning good news or bad news, everybody's going to know about it. Everybody. Speed, we're going to go fast. So, as fast as reasonably possible for given this scenario. In a perfect scenario, we're closing in 17 days. Clear to close in 17 days. And I would say, not even the perfect scenario. As long as we vetted it ahead of time, 17 days. If somebody just lands on our lap, like the deal that we met each other on, which I'm going to give an example on, it's going to take longer, unless it's perfect. We make it perfect, so to speak, by us doing all the work up front before an offer is accepted, and now we could pretty much close in 17 days no matter what happens. But when we get a deal that lands in our lap, and it's not just a naturally qualifying deal, no matter what mortgage company they went to, they were going to be able to close it, no, that deal is going to take a little bit more time. So quality, transparency, and speed, and the speed is always going to be as reasonably fast that deal can actually close. That's a very important aspect because there's a lot of false promises out there. Give me the deal. Doesn't matter what the deal is. I'm closing in 17 days. Doesn't matter what the deal is. I'm closing in 30 days. You can't really make that guarantee. I can only make that guarantee if we looked at it up front. Is the only way that we can make that type of guarantee. And we do. So I'm going to show you guys a quick video real quick. And I'm going to get into the example of the deal that we worked on together of what the challenges were on that deal and how we were able to still get it done with the proper communication for everybody to know what's up. The Connect Promise, we got a little video here. And that simply pretty much mimics exactly what we just talked about, right? What you just heard me say, we shoot to say it all the time. Am I gonna say it happens 100% of the time? No, but it happens pretty much all the time. So that conversation of what we do happens. Now, on our deal, it's a little lucky how we met each other. So Laurel and Mike met each other through a cold call. And how did Mike send us a referral with an accepted offer already? So we never even looked at the deal. So we're just like, oh my gosh, we just got a $500,000 deal, I want to say, $600,000 deal with an accepted offer. We didn't even look at it yet. She took the application, amazing income, everything's perfect. We're like, this is going to close just like this. Unfortunately, the credit profile was horrible. There was major collections, there was this, there was that, and he wasn't even aware. He had no idea. So we looked at credit. No one even pulled his credit for the last 4 months. So he was approved by someone, I don't know who, but he wasn't really approved. So once we looked at it, the initial conversation with us, the client, and Mike was, we need to work on fixing credit, and it's going to require this, this, and this. And it's going to take this much time. It took 1 month is what it required just to fix the credit before we could submit the loan. So it took a whole 28 days to be exact to get the credit back how we need it, which required the buyer also to go and spend his money on getting some stuff fixed, paying some debts off, which we helped him with. Got all that updated, got credit updated. Now we could submit the loan. And then from there, it took another, call it 20, 25 days to close at that point. So his deal really took about, call it 50 days, 45 days. When in reality, had we seen the deal in the pre-approval stage when we're supposed to, that deal would have already been, all the stuff would have already been taken care of. At the time when Mike would have got the accepted offer, we would have closed that deal in 17 days, no matter what. And the value came in short. Yep. Yeah. So the value came in short. So there was, the buyer owed us about $1,300 for the credit repairs because that's what it cost us to help him with it. When the value came in short, we waived that because it was a big deal. So it was a good deal. So it was worth it. Mike gave a credit to help out and the seller gave a credit to help out. Like everybody worked together to get it done. So that's one of those examples of transparency. Like the moment we saw that's what the deal was, I made a call to everyone involved saying, this is what it is. I'm sorry to be the bearer of bad news, but this is what it's going to take. And please allow us to do it. Thankfully, everyone trusted us, believed us, and we got it done. We got it done. And now that family is in that home, and now we're getting hopefully more deals from Mike, you know? So that is how that works. The main point of that is we'll close any deal that is closable as long as there's enough time to do it. And as long as we see it first, all the hard stuff is taken care of ahead of time. We might tell you, hey, John that you just sent me, he's approved. He's approved with taking care of, how you doing? Yep. How you doing?
Good, sorry.
You're good. What's your name?
LaDonna.
Terry. Hi. Everybody, LaDonna. Madonna, you said?
LaDonna.
LaDonna, yeah. Yep.
Whatever she is, okay. Strawberry lemonade and
So, hey, go ahead and start showing homes to John. Just make sure you remind him what we're telling him. He needs to, over the next 1 month, over the next 2 weeks, he needs to get this and this, right? And the money he's supposed to be getting from here needs to happen. So if the approval has those little elements to it, you're gonna know about it. You're gonna know about it. That way, all you gotta do is say, hey, did you get Laurel what she needs? Like, what do you mean? They were telling me something about how you had to get this account taken care of. Is that all set? Yes, it is. Cool, thank you. Like, it's just that little, not just hearing it from us, but hearing it from their realtor as well, just a little seed, planting that little seed. It helps all of us to get it done. But we'll never send them out without you knowing that, first and foremost. And we'll never send it out without us being confident that it's getting done. If I personally, myself, am not confident that it's getting done, I won't pretty much let anyone send out an approval letter. You know, because if there's an element that's there that is just too hard or I'm not confident the person is gonna get it done, you're not approved. You're not approved. It's not, you're gonna run into the example that you gave us in the beginning where you're not gonna get to a closing. Push comes to shove, this popped up that in our case, that we brought up to you, and they're not gonna be able to do it. So we just wouldn't allow them to go shop for a home at that point. Not with our company at least. And that's smart because everyone saves time, everyone saves money, because time is money. You get peace of mind. It's probably arguably more important. You know, with Connect Loans, with Laurel, with the entire team that we have here, you know that the deals that you are working on, you have the peace of mind. They said it's going to happen, it's going to happen. They said it's not going to happen until 1, 2, 3. It's not going to happen until 1, 2, 3. Now you could decide how to utilize your time. If you have 3 clients to help on a Friday, and one of them is the one that is approved, and the other 2 are the ones that are not approved, which one are you, in all honesty, which one are you going to help? There you go. And that's how it should be. That's how it should be, because you're going to go show a home when they're not ready. They can't close any. It's a window shopper at that point, you know? So that's that. That's one of the items. That's, I would say, the biggest item, because everything we do stems down from this. Everything that we do stems down from this promise of the Connect promise of quality, transparency, and speed. Literally everything that we do stems down from that. So we're gonna get into another item, but before I continue, is there anything else anyone wants to add?
I just want to commend you. That's essential as having paperwork beforehand, because I've worked with banks and credit unions, and they'll throw anybody a pre-approval and give a false number of what they have to bring to the closing table, and I've seen deals fall apart. I've had a few deals fall apart because the numbers weren't ran from the beginning, the buyer was unaware, there wasn't enough transparency from the lender side, so that's a good thing. Makes it easy to work with. Make it easy to work
Thank you.
with. Yeah.
Thank you. We all appreciate that because we put a lot of time and energy into making sure that's the case. You know, sometimes some realtors will get upset. Oh, my other lender would just give me a pre-approval when I asked for it. This is the actual thing, and a realtor has told me. I'm like, do you want me to just tell you what you want to hear? Or do you want to really close the deal out here and save your time? So thank you. Thank you. Anything else?
And I will attest to everything Terry has said. When we did work that deal, literally, like I was a transaction coordinator. Lenders don't reach out to a transaction coordinator and update them. And sometimes you guys are too busy to keep your transaction coordinator in the loop with sometimes small details such as. And so it's helpful, number one, because if he communicates with the transaction coordinator, which you all will have on your deal, you can continue to push forward, be the face of the deal, and knowing that the transaction coordinator and the lender has already communicated, but Laurel and Terry both would call me, and they would send out an email with all parties included, and they were very much on it. When they said they were gonna communicate something, they did it in that time, and like I said, it was a difficult deal, but they pushed through and got it closed, so.
Thank you. Thank you. And that we do it to everyone involved, like the realtor, you, the listing agent, the listing agent, you know? So to the listing agent seemed like she was new too, to where she had to get her manager involved to make sure like we weren't, to like vet us, to make sure we weren't like BSing her, you know? And so it was all got done. It took everybody's approval to let us take the time to get it done. So thank you for that as well. Okay, next item.
Even title companies, we even let title companies, when it was going past whatever, we needed like a new updated commitment, I remember this specifically, we had to get up because it expired within a certain amount of days. The commitment expires and you're trying to close, and after you close, you have to wait 3 days to get a new commitment. We update it, so we try to make sure that if we know it's gonna delay or something, we let everybody know what's going on to be ready for it.
To add to the title company thing, we'll even call the seller's title company at some point. Not like always, but like let's say after our loan is approved. Hey, is there anything on title on your end that could possibly slow us down? Like we need to know. If it is, maybe we could help. You know, and you'd be surprised when there is a problem, they tell us. And now we know. And now we either know how to handle it and help them, or we're like, okay, just let us know when it's taken care of. So if we were gonna close on the 10th, but because of what seller's title just told us by their conversation, it's not closing on the 10th because the seller got an IRS lien that they're still working on. And we just found out about it now instead of, hey guys, we're waiting on a critical close, and now we find out about it. Next item, it's been kind of the whole point of the Connect Promise and some of the stuff we're talking about. Peace of mind and confidence. We're gonna get everyone on the deal mentally ready. Again, we take the buyer through the process, acting like you're closing tomorrow. Whether they're closing a year from today or next week or next month, doesn't really matter to us. Take you through it so you know what's up. Another thing we love to do is let's pre-approve you so that you could at least decide, are you gonna buy a home this year? Because if they're not really pre-approved, they might think they're gonna buy a home this year because they don't know the real numbers. They think it's just a down payment and that's it. But by going through the approval process, it's your total out of pocket. Oh, you have to pay off 2 credit accounts that are $10,000 each, it's $20,000, right? Et cetera, et cetera. Now you can go sit down at home over the weekend and talk with your spouse and say, we're gonna make it happen. It's just gonna take 2 months, 3 months, or you know what? We're not buyers until 2024. We're not ready. We love to do that because now for us, it's not a deal for us. It's just on our Excel sheet. We'll follow up with you once every 3 months. We're definitely following up with you in 2024 when you said you'll be ready, and that's it. And it just coasts from there, and we all know about it now. It's in our pipeline for the future, So sometimes people say, oh, I don't wanna waste your time. You're not wasting my time. This is what we do. I'd rather know. I'd rather know you're a buyer today or you're a buyer next year instead of not know. Because now I can organize my time accordingly. So that's that. I'm gonna get into how we do our approvals, which is one of the things that we were talking about. Sylvia had mentioned findings. You're about to see what we mean by that. But before I do that, any questions? Anything you guys want to add? No? Are you sure? All right. All right. So we're going to get to the next item. Certified approval. So I specifically use the phrase certified approval because of pre-approval and pre-qualification, what we're talking about in the beginning. And approval coming from us is a certified loan approval. So before I show you, I want to ask you guys, has anyone seen a Fannie Mae findings, an underwriting approval, or a Freddie Mac, or an FHA? Or you guys know what I'm talking about? You guys seen the actual, not an approval letter from a mortgage company, directly from FHA, Fannie Mae, Freddie Mac? Have you guys seen this? Okay.
Yes.
Of course. So every deal that happens in the United States of America, it's run through either Fannie Mae or Freddie Mac on a conventional deal, or it's run through Fannie Mae on a FHA, VA, or USDA deal. And it is a computer that gives us the approval first, and then the underwriter does their human job. If the computer doesn't give you an approval, there's no deal. There's no deal. It doesn't matter what you do on the other end. Now we got to work for the future. So we pay for that software. We do it ourselves in-house. We don't wait for anyone to tell us our deal's going to be approved or not. We do that ourselves. So here's an example.
Terry, real quick, what he
Yep.
means by that is there are lenders that don't pay for the software, that submit the brokers that don't pay for the software, that submit the loan to the lender they're using, let's say UWM or Clinton Loans, and they wait for them to tell them what the findings came back at. Where we pay for it upfront and we know the answer before we give it to, UWM or Clinton Loans or whatever lender we're using. We know what the answer is upfront. And we've had to fight with the lenders too, like if they get their findings, if their findings are not matching our findings, now we're like, wait a minute, let's figure out why they're not matching because we do have an approval and, so on and so forth. Where other brokers don't pay for this program and then they wait for the answer from the lender.
And they'll wait. Guess when they wait? After accepted offer. After everyone put their time and money and put a deposit. It's crazy to me. It really is. It's always been crazy to me. That ever since I learned that this is available in 2012, I'm like, how are people sending out approvals without this? So that's that. And there was one more thing I wanted to add to that. It'll come back to me. It'll come back to me. But this is a Fannie Mae approval. So if you have a conventional Fannie Mae loan or any FHA, VA, or USDA deal, if the lender doesn't have this, they're not really approved. It's a whole long document that we're not going to go through, okay? But this is everything, conditions, everything that we get ourselves.
Why would the banks don't?
No, the underwriter who is signing off on the deal does, but the people who pre-approved it are not necessarily doing that. It's a good question. It's a good question.
Sometimes for like banks and credit unions, it's more so about
Their credibility as
just getting the people, just getting the volume, not necessarily, just get the volume. You just giving letters out. I gave letters out to 20 people today. That's what it is. I like when they
It's the philosophy of let me throw 10 things at the window. Whatever sticks, whatever doesn't. I don't care what happens to the other people. Because that loan officer is still, if they do enough of that, they're still going to make money. But there's a lot of, for me, and I would imagine everybody, there's a lot of anxiety. There's a lot of disappointment. There's a lot of people losing their time. A lot of people losing their deposits.
A lot of people are not going back to you afterwards.
Yep.
And that's your fault. Why didn't you do this?
It's literally where the horror stories come from in our industry, is because people don't do this. Okay, that is a Fannie Mae one, and then there's a Freddie Mac version. Same idea, just, same idea.
And these also give the appraisal waivers as well.
Yes, so with this, do you need to receive one of these to accept an offer? No. If as a realtor, sometimes a realtor will accept our offer. We call them. They don't call us back and they accept the offer. I'm like, how'd you accept the offer without vetting me, without calling Laurel, without calling Vanette? Like, how'd you not call us to just grill us a little bit to make sure the approval is legit? We're not Quicken Loans. We're Connect Loans. Like, I don't expect to be known like Quicken Loans. How you not, even if you're JP Morgan, I'm calling you, JP. I'm going to find out what's going on. I want to make sure your deal's good to go. So you don't need to get one of these to accept the offer. However, if you have doubt after you vetted that LO, if you have doubt, you should ask for that. If they cannot provide that, I wouldn't accept the offer.
What are we asking for?
The findings, the AUS findings.
automatic underwriting system findings.
Now, I wouldn't ask for it on all your deals. I wouldn't, because we don't even send out all of our deals because it confuses people. It confuses realtors. A lot of people don't know what this is. But this is a little secret for you guys. If you have doubt, if there's like holes in this, if there's holes in what's going on, you're not confident in it, or you're trying to decide between two great offers, hey, whoever could show me you're actually approved to send me the AUS findings, I'm accepting that person's offer. If they can't provide it, don't accept that person's offer. Just don't, So that's what I would do. Knowing what I know, that's what I would do. I wouldn't grill it unless I have doubt in that approval. So any questions with that?
What is AUS stand for?
Automatic underwriting software, automatic underwriting system. Same thing.
Did everything, they got money in the bank, credit.
Yeah, if you trust the convo, you're done. But if there's, that low's over here, he's over there, and is this, and is that, you're like, whoa, listen, I love your offer, but you sound like you're bullshitting me.
Or if you don't
Send me the approval.
Really, we never work with that lender.
Yeah. So again, I wouldn't ask for it all the time. Just be careful with it. Only do it when you have doubt. Or again, there's really two competitive offers, and you're like, whoever can show me the proof of this. They say, yeah, so the approval letter is for it. Yeah, listen, you're competing, I get it. I need the actual approval from Fannie or Freddie, and then I'll accept your offer. If you can't provide it, I'm going with the other guy. This is very simple. It's the only time I would really use it. Now, appraisal waiver. Have you guys been on a deal that required a mortgage, not cash, but no appraisal was required? Tell me about it.
Say it again.
You were on a deal that required a mortgage, not cash. Required a mortgage.
And it had an appraisal. I think it was
There was no appraisal requirement.
right. Their down payment was larger, or the value of the home. I can't remember.
Yeah, you're on the right track. There's such a thing as, you guys know about appraisal guarantees or, hey, no appraisal contingency, but it still requires an appraisal. Value comes in, you're good. Value comes in short, they pay the gap, right? We're all aware of that. That's a beautiful offer. Incredibly competitive offer when you do that. In my mind, we could get almost everybody, which we do help with this, by the way. We get almost everybody to do a $5,000 guarantee. If someone's buying like a $250,000 home, we'll get them to like a $5,000 guarantee. Someone's buying a $500,000 home, we get them to a $10,000 or $20,000 guarantee to just make the offer. And most of the time, the value comes in. Or they made a $10K guarantee that came in only $2,000 short. It's like, what was the problem? Going to the appraisal waiver. If the client has good credit, first and foremost, if it's a conventional loan, good credit, 20% down or more. And lastly, we run findings on the property, what we just showed you, that AUS findings. We could run it with putting the subject property address. Fannie Mae, Freddie Mac could come back and say, we like the borrower's profile, good credit, 20% down. We have enough appraisal information based off comparables that have already happened that on loans that we just recently have done, we believe the value is good, no appraisal requirement. So now imagine we checked that before the offer officially went in, because you said, hey, we're about to make an offer, run this, check it out. We got an appraisal waiver. Now your offer goes in, you're writing it. Not only are we doing a full appraisal guarantee, no appraisal requirement. Be the seller on that deal. You win it above asking. I'm not requiring an appraisal. Are you not accepting that offer? 9 out of 10 times you're accepting that offer as a listing agent. So it's a huge deal. I'm not surprised more realtors don't know about it. They don't know about it because LOs forget to talk about it, or they don't know about it. So it's a huge deal. Pretty much whenever we're making one of those offers, we win it. Now, we're gonna tell you up front while we're in the pre-approval process, this buyer is putting 20% down. That's what the buyer wants to do. They are conventional high credit scores, so make sure any offer that's going in, make sure we check it. Like, don't just make the offer without us. Like, make sure we check it, because if you made the offer without an appraisal waiver versus with one, yeah, we might still win it, but what if we didn't win it and that would have made the difference, right? It's a big deal. So we do that on. Not only do we do that on the deals that we were telling you, it's that case, but we like to run the numbers with you and the buyer before you make an offer in general. On an FHA loan, 3% down, 5% down, because taxes might be a little higher or lower than what we approved them for. The price is a little bit higher or lower than what you approved them for. And we check estimated values just like how you guys do. We have our own system. And if you're saying the value is worth more, and we're saying the value is worth more based off what we look at, and the buyer's the only one who wants to ask for 5,000 below, we could get together and say, listen, buyer, the house is actually worth more. Like, your realtor says it from their own sources. We say it from our own sources. Like, you could do whatever you want, but we're professionally advising you to do this. And you'll be surprised how many times, just because we check it out up front before the offer goes in, how many times we get them to the more competitive offer. Not the, I'll be very careful with what I'm saying, not the stupid offer. People say because you're paying more, that's stupid. No, not the stupid offer. The competitive offer. That's gonna get your family into that home, because our job is to get your family to the home, not to necessarily save you money. We'll save you money after. So we talked about, a proper approval. We talked about appraisal waivers. We talked about everything that we do on the upfront to make sure we have as much confidence and certainty in our deals. There is a certified approval, which is a legitimate pre-approval. And then we have something called a spark approval. I'm gonna show you a video, and I'm gonna tell you when we send this out. When we have the buyer that already has the money in the bank account, that is putting a high down payment, that is, maybe they're not putting a high down payment, they're doing a guarantee. They're doing a very competitive offer, and we know it's a deal that we could guarantee is gonna close fast. We're sending that out. Along with our approval, that video. Every one of our offers, to add to what you had said, all of our offers are accompanied by a phone call after you've made the offer. So you make the offer, we're CC'd, you have our approval letter, whether it's 30 minutes, 1 hour, 2 hours later. If it's made late at night, the next day. We're calling the listing agent to back up the offer that you just made as the mortgage company, not to do your job. Your guys' job is your job, to do what we're supposed to do as a mortgage company. Hey, this is what it is. We work together, etc. In your example, this is now our team works with them. This is now our third deal together, whatever it is. This is what it is. And just the fact that the listing agent knows that we worked together before is a huge plus. I'm sure you've been through that as a listing agent and also as a buyer's agent. But even if it was just our first deal together, you even know who we are. The listing agent, sometimes they don't appreciate it, which is crazy to me. But I would argue most agents appreciate the call. The comment they'll say is what Deanna said earlier. I'm usually the one that has to hunt you down for information. You're calling me. So I already know that this is gonna be good communication. Could you guys come up a little bit? We have better offers. They might tell me, and I'll be like, hey, listen, I'll call you right away. So, et cetera, et cetera. So this thing that is, to me, simply good business, not just good mortgage or real estate business, is what we do on all of our deals. And that is that. The next thing I was gonna get into was products. Any specific product questions you would like me to answer? Like 1% down?
I wanted you to show them the AUS approval that shows the appraisal waiver on it. Please?
Yes. So I showed you guys the AUS findings. I was talking about how we know when we get an appraisal waiver. It straight up tells us, this is a Freddie Mac approval, and it says your property is eligible for an appraisal waiver. Right here. If we don't get that, it's not there. Very simple, we do a normal appraisal.
Not eligible.
So approved and also appraisal waiver. Fannie Mae has their own version of it. Again, same idea, just a different look. So we know, we could go into it with certainty. And if the listing agent is like, what do you mean? I've never heard of this before. I can show them this. It comes straight from Freddie Mac. I can show them this. It's not from me, from Freddie Mac, So that's that. Normally they just accept it. We're telling them appraisal waiver, they trust us, they trust you, they just accept it. We rarely have to actually provide this. But we do this in our deal so that we know. We'll tell you. It's something you never even need to look at it. We tell you that's what it is. Any questions with that? Yep.
If you put an appraisal waiver in your offer, and you don't qualify for an appraisal waiver, but it's in writing, how does that?
If you put an appraisal waiver in your offer and you don't qualify for one, that means you're gonna order an appraisal, and no matter what value it comes in at, you're paying the full price. Otherwise, you're backing out and losing your deposit because your offer is based off a waiver, and therefore you're losing it. Now, that would never happen with us.
I was just about to say that.
Yeah, that would never happen with us. Why? Because we're not gonna allow the waiver to go in unless we got this, and if we didn't get this, and the client wants the house that much, or they're doing a full guarantee, then we all already know they're taking that risk.
I was just wondering why
The only time they would need this is if they're doubting it. Again, I was telling you, you should never ask for this ever unless you're doubting the person you're talking to. That's it. It's the only time you should ask for it. And, or again, you got two majorly competitive offers. Like, how do I choose? Who could send me this? That's the only other time I would do it. Look, you wanted to say something, Sylvia?
I was gonna say that there has been a situation where we've had an appraisal waiver come through Freddie Mac, and then we get to underwriting to the lender, and then all of a sudden there's, let's say, a unit number, or some fluke thing happens, and we lose the appraisal waiver. Where do your Freddie, like, I'll hear Freddie Mac or Fannie Mae drop the appraisal waiver, and it comes back as not eligible anymore. Most of the time we've got it back. There has been I want to say maybe once or twice probably, where we couldn't get it back. But again, like Terry said, with finesse and with care, you bring it up the right way, like we had it, this is the scenario, this is what happened. We're gonna order an appraisal on a rush. We usually will cover the rush fee, and now, you know, we're still on track to close, we're still getting the appraisal done, no one's losing the offer, and we're still moving forward. And at that time, they're already so deep into the loan, and if they're already happy with what's going on, they're not gonna wanna pull their offer back.
And just for full disclosure, it's happened literally 2 times in the entire time I've ever done them. Like, it's not, you know, it's very rare, very rare. So you when we're doing it, you know, it's a done deal at that point. As long as they accept this, it's gonna be a done deal.